Happy January 26th, JLD here, and welcome to MicroStrategy today. In this show, we'll talk about why MicroStrategy will never be caught. Why right now it's like a coiled spring about to be unleashed. We address the tax FUD that happened yesterday because of the Wall Street Journal. And then I have a brilliant and incredibly long post that just dives into MSTR's brilliance. Plus, I have two unbelievable video clips, one from Michael Saylor, one from Dylan LeClaire, dropping value bombs. Don't miss that. And remember, this video is not financial advice. Comment below where you're watching from. We definitely collect that data. And also, comment your thoughts. We're having some great discussions in the comment section, almost 400 comments on yesterday's video. Join in the discussion. I respond to every single one. Great conversations are being had. And let's dive on in. I loved this tweet that BitStrategy shared about Saylor has the confidence and intelligence to buy Bitcoin without succumbing to groupthink. Now, what is groupthink? Opting to conform with consensus view rather than engage in critical thinking. So opting to conform with the consensus view rather than engage in critical thinking. Almost every single company in the world has to succumb to groupthink. Michael Saylor was able to understand and realize what the best and biggest opportunity was laying there right before him back in 2020 and execute on that relentlessly for now over 4 years. And what has that resulted in? MicroStrategy being the best performing company of the past 4 years, building the biggest reserve of Bitcoin the world will ever see a single company ever own. And he's just getting started. I love it. Want to move on to BitStrategy saying it's already too late for the big US banks. Any move to rapidly acquire Bitcoin will trigger a huge Bitcoin candle, and MSTR will, one, outperform, and two, have a massive volume increase. Our subsequent BTC purchases, funded by this influx of fresh volume and volatility, will then dwarf any paltry initial purchases made by JP Morgan, Citi, et al. They can't catch up. If they do nothing, then it's even worse for them. It's over. Good game. BitStrategy nailed it. This is the post I was talking about where American Trader goes through this really long and detailed thread about why MicroStrategy does not owe billions of dollars in taxes. They simply do not. It was incredibly poorly researched, fake news that the Wall Street Journal and others were spreading yesterday. And this post shows you exactly why. I will put it in the show notes if you want to go through this and see all the great information that American Trader put out there. It definitely is a long and interesting post. I want to share this from Matt. MSTR is criminally underleveraged and still trading at a solid 1.8x premium to Bitcoin holdings. I wonder what happens when they lever up with more converts, enter the preferred stock market, and continue accretive equity issuance. MGU multiple go up. And that is happening soon. The converts are coming. The preferred is coming. A lot of exciting things. And I like how Marty posted like this. And this is, of course, MSTR's multiple of net asset value. The blue is the actual NNAV of MicroStrategy, where the red is the fair value model of NNAV. And so you can see this coiled spring here that has MicroStrategy ready to jump back up to the fair value model NNAV. Now, this is a long post, but I think it's time for us to go through it because there's so much great information here. So I'm just going to go through it fairly quickly, but I will post it in the show notes if you want to go through it at your leisure at a later date. MSTR is the most asymmetrical bet in the entire market. I'm bullish but objective, and I lay it all out here. Let me explain. By Bedlam Capital. MSTR presents an asymmetrical advantage for us who own on two fronts. One, informational asymmetry, and two, risk-reward asymmetry. We are in an extremely fortunate situation right now. I'll start with the informational asymmetry advantage. Simply, the market has no idea what to make of MSTR. If it doesn't understand what MSTR has become or how to it doesn't understand what MSTR has become or how to value it. I've seen accounts that I respect, good accounts, say that MSTR's best days and his greatest asymmetric advantage were last year, but that's impossible because the asymmetric advantage greatly improved within the past 90 days. In Q4 2024, MSTR reinvented itself, really in all of 2024, but much more so in Q4. It evolved from a simple BTC holding company into a BTC yield company. BTC yield is a new KPI which measures the net change in Bitcoin slash share over a specific time period. Here is MSTR BTC yield over the recent years. 2022, 1.8, 2023, 7.3, Q1 to Q3 of 2024, 26.3, Q4 2024, 47.8. No one was predicting MSTR's Q4. It was not priced in. And the price is down 35% in the past 45 days. It's still nowhere close to being priced in. The significance of MSTR setting 4.1% Bitcoin yield in fiscal year 2024 cannot be overstated. MSTR went into 2024 as a Bitcoin holding company. Holding companies should be valued at their NAV. Just look at Bitcoin ETFs. Holding companies like pre-2024 MSTR or the ETFs do not generate yield. Bitcoin yield is equivalent to earnings. A company generating yield like new MSTR should be valued at a multiple of that yield. It's not exactly the same and is an atypical use of the term yield, so it confuses people. And then here's the MSTR data and metrics if you want to pause and go through that. Continuing, yield being equivalent to income is the basis of asymmetrical information advantage, and it is a significant advantage. MSTR went from its proper valuation being equal to MNAV to a proper valuation now being equal to MNAV plus a big multiple of his Bitcoin yield. And again, another great chart here. If you accept that Bitcoin yield equals revenue earned at 100% margins, then you can simply compare PE ratios to get an idea of fair value. MSTR's true PE ratio is 7.02, but you won't see that published on Yahoo Finance because they don't get it. MSTR will soon be repriced by the market to the tune of about 10x just to hit any semblance of fair value. And this is where the asymmetrical risk reward comes into focus. MSTR being priced in line with TradFi banks like JPM and the biggest gold miner, NEM. But MSTR should be valued in line with big tech like Tesla or Nvidia or digital banks like SoFi or Coin. All the factors the market considers when pricing a company's PE favor MSTR. Profit margins, year-over-year growth, CapEx requirements, scalability, first mover leadership. Across the board, MSTR is as good as it gets. It should trade at a minimum PE ratio of around 50. Even this is conservative. We are at the absolute floor right now, but this is going to start getting priced in very soon. Here are the main catalysts to trigger the repricing. 1, MSTR will exceed its future annual target Bitcoin yield in the first 3 weeks of fiscal year 2025. 2, MSTR will upsize the 6 to 10% target annual BTC yield to something in the range of 20 to 30%. 3, FASB mark-to-market reporting makes it obvious in May when Q1 report comes out. Meanwhile, Bitcoin is going to start making its parabolic move, and the price compressing ATM offerings will subside over Q1 as MSTR focuses more on the converts and the new preferreds. So the MNAV will start to expand through Q1, which is extremely important because the Bitcoin yield on the ATM offerings scales with the MNAV. Tapping the next ATM at MNAV of 5 generates 2x the Bitcoin yield as tapping it at 2.5, for instance. Of course, Saylor knows this. I expect him to start talking about higher MNAVs very soon. The 2x MNAV he's talking about in the past made sense when MSTR was generating 0 to a single-digit Bitcoin yield, but it makes no sense when it's doing 74.1. Saylor is preparing MSTR to take full advantage. He's building out the BTC yield armory. We have ATM, converts, and soon perpetual preferreds. We have proposal to increase authorized commons from 330 to 10.33 billion, which of course passed, and preferreds from 5 million to 1.005 billion. And don't forget, as highlighted in the 14A for the increased share count, MSTR has blank check discretion to issue different series of preferreds with different terms. Expect subsequent series to have increasingly better terms, just like the converts. The 21-21 equity and debt plan was supposed to be over in 3 years. That is looking like it will be exhausted in 6 months. Expect an upsized plan, something in the range of 50 billion sometime in Q2 to Q3. This is the perfect storm. We have Bitcoin's bull cycle peak coinciding with the market's imminent repricing of Bitcoin yield fundamentals and an artificially compressed stock price giving us a launch pad. Soon we will start seeing a real flywheel dynamics take hold where the Bitcoin yield generated from each treasury tool drives the stock price higher, which drives the MNAV higher, MNAV higher, which drives the Bitcoin yield higher. Right now, the MNAV is stagnant and depressed. So the upside is almost incomprehensible and the downside is negligible. Asymmetrical advantage to us. Bedlam Capital, thank you for that absolutely incredible post. I hope I did it justice. And now we are going to move on to two great video clips, one from Dylan LeClaire and one from Michael Saylor himself. Enjoy.
SAP 121 is a massive deal. I think a lot of people are kind of in the camp of not really knowing what it was even. It sounds complicated, just the name, but essentially, if you were to design a regulatory, a rule or regulation to basically inhibit or cripple the asset class from the traditional, financial world, this is what it would be, right? Essentially, anytime a bank would have to custody Bitcoin on behalf of their clients, not for themselves, they'd have to hold, if you wanted to hold $100 with the bank, they would have to hold $100 of cash to insure against that, right? So it's you don't see this with stocks or any other asset class. So it was really designed to not let the banks and the traditional, financial institutions enter the space.
Right.
So I think we're kind of in a similar spot to where, the ETFs rolled out and people said, is this priced in? Is this not priced in? For me, it's quite clear, right? You can't price in billions, tens of billions of flows into the asset that haven't materialized yet.
Also, I like this. He banned the creation of a U.S. central bank digital currency. That thing had red flags all over it from day one.
Yeah, it's great rhetoric. I think that a CBDC is really just an encroachment of freedom, whether it's the U.S. or any other country. So it's great to see them come out against it. And in our camp, we love Bitcoin because it is freedom technology, and CBDC is really the antithesis of that. It's Orwellian, and we're glad to see the administration come against it.
Dylan, this also the creation of this working group. They're going to have officials from the Treasury Department, Attorney General, Commerce Secretary, Homeland Security, BMA, Office of Management and Budget, just on and on and on. I think it shows that this administration is really taking this stuff seriously.
Yeah, indeed. I think that, there's a 6-month period here to evaluate whether, a strategic Bitcoin reserve or I guess broadly digital assets is something the U.S. wants to do. And that would follow in the footsteps of Bhutan, El Salvador. And there are rumors of multiple Middle Eastern countries in the last, say, quarter establishing a quite meaningful stockpile of Bitcoin. So, I think if the U.S. wants to remain dominant and, its world reserve currency status with open capital markets, embracing Bitcoin as an asset class and on the regulatory level is something that absolutely they should do. And that's what the administration is doing.
It seems like you've been tapping the market facility more so than converts in order to raise cash. And I'm wondering if there's anything to read into that.
Well, just the equity capital markets were very enthusiastic over the past 4 weeks. And so we're always considering, is it the convertible market? Is it the fixed income market? Is it the equity market we want to go to? And that's going to change from time to time. I expect that mix will shift more heavily toward fixed income markets in Q1 as we go forward, because right now we're probably getting a little bit too delevered and we'd like to actually get more leverage. We have about $7.2 billion of converts, but 4 billion of them are already essentially equity. They're through the strike price, they're through the call price, and they're trading with a delta approximately 100%. So they're looking like equity. And so we would like to go back and build more intelligent leverage for the benefit of our common stock shareholders.
And there you have it, another episode of MicroStrategy today. Make sure to comment below where you're watching from. Also, any comments you have, any thoughts you have. We have great conversations in the comment section. I engage with every single one. Also, let's have it for a big week for MicroStrategy. Hit the like button to give MSTR some karma going forward. Let's make it happen. And speaking of karma, check out my Master MicroStrategy series. I will be periodically adding to this as time goes forward. I've already put 4 videos in there. One is a MSTR versus MSTY versus MSTX versus MSTU video, where I talk about the pros and cons of those ETFs. Another one is a complete walkthrough of the MSTR tracker with Radu, the person who created that tracker. So this, if you ever look at the MSTR tracker, which I show every single Monday on this channel, This is a great walkthrough of that. I have a video on how I DCA into MSTR every single day, plus the complete history of MicroStrategy. This is an hour and 48-minute compilation that if you want to educate your friends, your family, and even yourself on the history of MicroStrategy, this is the best video out there on how to do just that. You can find all 4 of these videos in the MicroStrategy Today channel. Under playlist, there's a Master MicroStrategy playlist, so please enjoy. And remember, this is not financial advice and that there is no second best.
What's the second best? There is no second best.